So our next presenter is Richard Hyde, Managing Director of West African Resources. So Richard is a geologist who founded West African Resources in 2006, and he took the company to IPO in 2010. He was instrumental in coordinating the $365 million debt and equity financing to fully fund the development of the SANBRADO gold project in Burkina Faso, achieving first production last year, March 2020. Thanks, Richard.
Thanks to the team at PayDirt for having us back this year. We've been attending since we floated the company in 2010, and we look forward to a bigger and better conference next year when things open up. I think before I kind of kick off, I might just address the elephant in the room, which is international fly and fly-out workers. One of the reasons why we all base ourselves in Perth is because it is a centre of excellence for engineering and for mining globally. The governments in Western Australia and federally are very happy for us to raise our money in Australia, to bring all the work back to Perth and into Australia to do our studies. And we need both the federal government and the state governments to sort of play ball with us because, you know, certainly in West African's case, we raised the bulk of our debt through an Australian debt fund in Taurus. We brought all of our feasibility study work back to Perth. We did that with Mintrex and Lycopodium and other groups over the years. All of our metallurgical test work was done in Perth. You know, we hired our key operational personnel early on from Perth and also construction personnel. And one of the things we really need to do is to get essential fly and fly-out workers exempted from these caps coming back into Australia, because I've had the opportunity to speak to both state and federal politicians. They both tend to blame each other on this topic. And what we really need is you know, and I was a bit twitchy when I was coming back into the Pan Pacific because I spent about 2 weeks here not that long ago. So, you know, it's something that we're all familiar with. All the service providers that are here in Western Australia are dealing with the same thing. We've got Parenti on site who are doing our open pit mining contracting. We've also got Burncut, which is another Perth-based international company doing our underground mining. So what we'd like is some acknowledgement from both federal and state politicians, and let's just find a solution, because I can tell you the hotel right next to our office in Subiaco has been at less than 15% capacity since it was built. So there's not like there's capacity here in Perth because no one's coming on holidays. So all the hotels are empty, and there are newer ones than these ones. So I think there's a solution, and we'd prefer it if state and federal will work together on that. So sorry, that's my rant. I'll skip on. So West African Resources, this is a snapshot slide. We're tracking towards guidance. We should be heading towards the upper end of guidance for production. And upper end of guidance for production, and also the upper end of guidance in costs. We have seen additional costs throughout the last 12 months, and given that we did commission during the start of the pandemic and we've operated our first year of production throughout a global pandemic, I think we've done a pretty remarkable job. The resources stand at just under 5 million ounces, reserves about 1.5, and the reserve number will be increasing in the next few months when we include Toega into that as well, and also we've hit some good results at depth. Why West Africa? Well, if you have a look at this slide, there's some of the world's biggest gold mining companies located in Africa, and if you have a look at the bottom right, you can see that West African is now the lowest cost producer on the ASX, and we've done that within sort of 18 months of our first gold. And that's because we've started mining from surface on a discovery, and we've had fairly cheap free milling oxide mineralisation from surface on the open pits. We've also had free milling high grade underground ore from the M1 South underground. So on our capital structure, we closed out the June quarter with about $45 million in cash and about $18 million in unsold gold. Senior debt stood at $111 million. That's our debt facility with Taurus. We expect to be sort of pretty close to cash backed or net cash by the end of this quarter, and we expect to have Taurus paid off in early 2022. So the market cap's currently just over $900 million. Our project's located in central and southern Burkina Faso. I did address this sort of topic at Diggers and Dealers, but the northern and sort of eastern parts of Burkina Faso, again Mali to the north and Niger to the east, have been seeing increased unrest due to Islamic insurgents, and obviously we're watching this very closely given what's gone on recently in Afghanistan. So more than 1 million people have been displaced in Burkina from the north and from the east, and more than 1,500 people have been killed, very sadly, along those borders. Our mine is in a fairly safe zone. We can continue to operate safely, and we've obviously increased our protocols and procedures in country to make sure we can operate safely. This is a snapshot of the SANBRADO operation. It's conventional open pit underground mining, conventional milling. We've got a SAG ball mill and conventional CIL back end of the plant with gravity as well. So we're achieving very high recoveries. We've been increasing production quarter on quarter since we started. So this shows the growth of resources on the project since since 2014. We've been aggressively drilling right throughout the sort of downturns and also the growth periods in the gold price. You can see that in 2020 we increased significantly with the addition of high-grade mineralisation at depth at M1 South, which we had said back in 2018 when we funded the project that we'd keep drilling when we got the chance to, and we did. Also, we acquired the Toega deposit, which is about 14 kilometres away. So another sort of over 1 million ounces of 2-gram material coming into the portfolio there as well. One of the things that I was very keen to do as soon as we kind of started production was to get back drilling and increase the production profile of SANBRADO. So bringing in Toega, you can see that we've got a very strong production profile over a decade now, well over 200,000 ounces a year. We're tracking towards guidance at the moment. The next 3 years are fully based on 100% ore reserves, and with the ongoing drilling we'll be adding more ore reserves as we go forward. This has been our ramp up from Q2 last year, so obviously costs coming down and ounces coming up, and I'm kind of, with the way we're tracking this quarter, it's going to be another significant increase on Q2 with costs coming down and ounces coming up significantly. So we spent a lot of effort working on underground development earlier this year. That's really set us up for the next sort of 4 quarters of continuous stoping, moving into 2022 and 2023, and that'll see us at sustained high production over the next couple of years. So the deposit that's really driving our high production and low cost is M1 South. It's really only about 120 metres in strike, and it's on the main chute. And we've had significant vertical continuity with drilling, so we've put in some 1 kilometre holes and we've hit mineralisation at nearly a kilometre depth. So we've added some inferred resources at depth. As the decline kind of it approaches various levels of depth, we can infill the underground resource and upgrade the categories. And we expect to have that decline down to about sort of 400 vertical metres early next year. You can see recently we had some good results on the chute to the north, which we put out recently. So we think there's good potential to add more mineralisation at depth, and we'll be driving across to that and setting up some drilling platforms to keep drilling on the northern chute as well in the near future. M5 is a very solid deposit. It's over about 1 million ounces in reserves, just about 1.5 grams. It's got very good metallurgical characteristics. It's a very straightforward mining operation, and it basically fills the mill. So we've sized our project on the open pits, and obviously we prioritise a high-grade mineralisation from the underground. But what this has allowed us to do is to build a big mill and obviously maximise our production. There's also underground potential at the southern end of M5, which we'll focus on later this year and early next year. Toega, which is a deposit we acquired recently, you can see there's the resource that we put out recently is 22 million tonnes at just under 2 grams for 1.3 million ounces. We've currently been working on the feasibility study for that, so Geotech and Metcore is back here being worked on in Perth. We're working through our social and environmental programs with our teams in country, and we'll be submitting our ESIA to the government late this year. And that sort of sets up the permitting timeline for next year and bring it into production in late 23 or early 24. So our E&S commitments in country, and I noticed that there was some internet sort of warriors criticising some of the speakers on ADU this year, and which I just unfounded. It's people who don't do any research, and I know that there are plenty of African speakers on this in this conference, but a lot of people who are involved in obviously developing projects in Africa have spent a lot of time there, and certainly myself, I've had 20 years of experience working in Africa. We've raised all our money in Australia internationally, and I don't know how many times we went around the world when we funded the project in 2018 to bring all that money back to Africa so we can invest it there, which I think is a very good thing to do. Because from doing all of that, you end up with very good social benefits. We're the biggest employer in our region. We're leading the charge with programs for livelihood restoration. We're training a lot of local people, and as I mentioned at the last conference, we've got female underground truck drivers. 7 out of 12 of the drivers were female and have been trained up locally. So we're doing a lot of good work in country, and obviously we're maintaining our licence to operate. We're also making a positive impact. We're investing back into the community that we're operating in. So we've built 3 schools. We've put power on for 5 schools recently. We can see the weaving workshops and also some of the products down the bottom that the ladies are making, and this is sort of our investment in the local community. And we have to do this. We don't have to do it, but we actually want to do it, and it's important that we maintain our social licence there. Touching on our workforce, so I know that we've got about 90% of our workforce is from Burkina Faso and about 10% expatriate. There's probably only 2 or 3% of our whole workforce comes back to Australia, but these are very skilled people. These aren't sort of, as the Premier said recently, people who fly up to Indonesia, fly helicopters around and bring back COVID. These are very skilled people who are at the top of their field, and we need them to go to Africa to help us develop projects if we're going to make a difference in these developing countries. So, like I said previously, all of our expats who are travelling backwards and forwards are fully vaccinated. We've got some of our people who have done 6 and coming up 7 hotel stints in quarantine, which is a lot to ask from people. So, we hope there's going to be a solution that we can get some of those regular travellers exempted from the caps, so at least in the short term they can keep working for us. But in the longer term, we hope there's a better solution where fully vaccinated workers can do home quarantine with testing. So back onto our people on site. So 60% of our senior operational people are from Burkina, and a lot of those have been trained in the last 18 months to 2 years. 50% of our site workers are from the local region, and 20% of our workers in the company are female. We don't discriminate, so we give everyone an opportunity, regardless of gender, social and ethnic backgrounds and age. We're fully an equal opportunity employer, and we're running a lot of programs on site which have got Australian accreditation. So people who are working for WAF will actually get a qualification that's recognised internationally. So wrapping this up very quickly, we've got a quality board and management team who are aligned with shareholders. We're fully invested with our shareholders invested in the project. We're tracking quite nicely towards production, so towards the upper end of production for gold and probably towards the upper end for costs as well. We've got a 10-year mine life which is unhedged, so if investors want exposure to unhedged gold, I think West African Resources is a very good company to invest in. And we're always working on our social licence to operate and doing things to the highest standards that we can internationally regarding environment and social. We've had 5 quarters of continuous production. I'm looking forward to making that 6 and then 7, and looking forward to kind of growing ore reserves and resources when we release our update in early 2022. Thanks very much, and I'm done. It's very quick.